This is an affordable housing finance company. Your ticket size is about 9 lakh. You're present in 20 states. You have 487 branches. Now to the growth. The AUM growth of the company was about 16% in FY23, approximately the same even in FY21. And then in 9 months of FY24, the AUM growth bumped up to 20%. What explains that?
Okay, so let me first give you a little flavor of what happened in 2023. The figure that you see of 16% is the correct number, of course. That's how our AUM grew. But if you recall, till about March 22, there used to be a scheme by the government of India called Pradhan Mantri Awas Yojana under the CLSS subsidy scheme. So we, on an average, on a yearly basis, used to get a subsidy of about 250 crores year on year. In March 22, when the scheme got closed, we at one shot, instead of 250 crores, got 750 crores of PMAY subsidy. The moment the subsidy comes into your system, your AUM drops by that amount.
Okay.
So this additional 500 crores that we got in FY23 is the answer to 16.5. If we were to adjust for that, our growth was about 20%.
Okay, so adjusted FY23 AUM growth was 20%.
Close to 20%.
Which has continued in 9 months.
In 9.
And in your assessment, can you sustain this 20% growth?
It's quite sustainable. There is quite a healthy demand in the market, so it's a sustainable growth.
Okay. But again, your peers are growing at a faster pace, right? So something like an Aptus Value Housing Finance grew at 32% between FY19 to FY23. Home First Finance grew at 31% between FY19 to FY23, while your average growth was 15%. Even adjusting for all the factors that you name, maybe it would have been higher, but it's still slower than some of your peers.
So I would, the way I would want to look at it is all to do with the size that you're taking from. For example, if I am to open the year from today at 19,900 crores, that's the December 23 number for us. Hence, the percentage growth is adjusted for that. While the names that you took, whether it was Home First or Aptus, they are at about 8,900 crore, 9,000 crores of book size.
Okay, so is size a hindrance to you growing at 20% sustainably?
No, so even at this size, at about 18,000, 19,000 crores, that's the current book size that we are operating on. We are growing at about 20% historically in the last 2 years. So obviously, size is not a constraint at about 20%.
Just before the IPO, your NIMs have shot up to 9% as of 9-month FY23, which compares with 8% in FY23. In FY22, it was 6.9%, and in FY21, it was 5.8%.
That's right. So what happened in the 9 months,
What happened?
Right?
What changed in the last 9 months? Because your peers have reported a contraction in NIMs because of the rise in borrowing cost.
So the way it is, I would want to give 2 or 3 answers here. One is, if you look at our book, 83% of our portfolio happens to be floating. Right, which means if I am getting an interest rate bump from the banks, I am passing it on to about 83% of my portfolio. That's exactly what happened in the last 9 months. So when the interest rate cycle was on the up, we increased rates for the customers to about 1.25%, whereas the follow-up increase on the cost of fund happened a quarter later, and that's why the difference in the NIMs. But a sustainable NIM at about 7.5%, 7% is what is very comfortable.